make a decision. I think the worst thing you can do is kind of just like say, I'm going to take this trade. Am I going to get out? Am I not?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right, Walter, this is something that you probably know about from your studies in psychology. This idea of paradox of indecision. I think they call it like Birdian's ass or something like that, right? Where the donkey is between the food and the water, and he can't make a decision, and then he dies because he doesn't get either one. How do you see that playing out in trading? Like, how do you see that manifest?
Well, I think in trading, our gut instinct is to take the profit and to not wait for. So, let's say you're in a trade, and your trade's in profit, but it hasn't gone as far as you had hoped it would go. Let's say, for example, you risk $1,000 and you want it to go to your $2,000 target. You want to make $2,000 on your $1,000 risk. It's really tempting when it's at $800 for you to go, maybe I should just. It's almost Friday. Maybe I should just take that profit, you know?
Mm-hmm.
And the problem with that is that it messes up all of your stats. So I think when people are stuck and they're indecisive, the instinct for traders, for us, is to do the wrong thing.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
It's usually to take the profit. It's usually to, put off the pain. So take the profit quickly, or take the nice feeling thing quickly, and to put off the thing like the losing trade, move the stop away, move it further so I don't get stopped out yet, give it more room. Like those sorts of things, I think in traders, when really it's interesting that some of the most successful traders, what they've done instead is they learn to adapt and interpret the market information and feedback that they get differently to most traders. So, for example, trading with really low win rates strategies, or not taking a lot of trades and having a lot of restraint. You know what I mean? So it is really easy to get stuck in that situation where you're like, I don't know what to do. But I think the tendency for most of us, at least for me and a lot of traders I've talked to, especially when you first start trading, is to do the wrong thing. So to take that quick profit, to put off that painful loss, all those sorts of things are kind of like what we're built to do. And it's why the markets, it's classic. Like I was just reading the other day about this hedge fund, and this hedge fund had been bearish for years. Okay. They had been banking on a market collapse. And interesting thing about it was this year, they had finally decided, you know what? No, we're going to go long. We're going to go long the markets. We're not short anymore. And then March 2020 happened, and with the coronavirus freak out, and of course the markets all went down. And so they literally decided to flip right at the point. You know what I mean? Everything turned around. And it's so amazing how we are so good at that as people, at picking the exact turning point and deciding, you know what? Maybe I'm doing the wrong thing here. Maybe I should do this instead. And it's always, right around the point where you should actually not do that. And I think that kind of that's the story of the markets. That's why it's so difficult for a lot of people to make this work, is because you're just built to go against it, including, that being indecisive or deciding to do sort of the wrong thing mathematically. Financial, what are they called? Behavioral economics. Like they say that we should be very rational and make the rational decision and the one that makes the most money and all that, but we don't do that. The data is pretty clear on that. I believe that we don't do that we don't make those decisions that are most rational. And so instead we have these driving things, like the drive to be right, the drive to be right is to take profit quickly, the drive to avoid losses and say that you're incorrect. Both of those are kind of the same thing. It's like you don't want to take the loss, and you also don't want to say that, I made the wrong decision here, all that stuff. So it's a tricky thing. What are your thoughts?
Yeah, for sure. People, I think also it's worth mentioning that you should make a decision. I think the worst thing you can do is kind of just like say, I'm going to take this trade. Am I going to get out? Am I not? And make a decision. Whatever you think is the right thing, just make the decision. And then number two, record it. If you can do those two things, I think you'll be you'll learn much faster because you'll understand, okay, I have a tendency to do this, take profits early, whatever it is. And then I record that in my journal, and I can see that doesn't result in much. But I think a lot of times people get stuck with a decision and they're like, oh, maybe I should do that, maybe I shouldn't. And then they kind of like flip a coin, and you're not really sticking to one path. If you can stick to one path, I think you can understand your logic and how you really feel about the trade. And then that will allow you to either continue on that path if it's working, or take another path if it's not, or whatever.
Yeah, that's a really good point. That's a really good point. I learned that lesson. Like I was reading about a famous surfer, and he was saying how, like, as the waves get bigger, I don't really surf like huge waves or anything, but when I was younger, I did more, I guess. And he was saying that the worst thing you can do in like big surf is to be indecisive. Like you really like, and it's so true.
Yeah,
because it's exactly what you're saying. Yeah. Yeah, it's so bad because like when you're paddling out, you've got to decide, are you going to try and get duck dive under the wave, or are you going to ditch your board? And when you're paddling forward wave, you got to decide, am I on this? Am I definitely going to try and catch this wave? Because what happens sometimes is people like get a little bit fearful or whatever, and they pull back, and then they're stuck in the wave, and then they really take a pounding, like all that stuff. Yeah, exactly. So it's the same with trading, and your point about having a record is really good, because then you can learn. You know what I mean? Mm-hmm. Like you can learn obviously from experience, but it's so much better because we kind of trick ourselves, and we cloud our memories by thinking that we're better than we are, or sometimes worse than we are. But I think for most of us, we think we're better than we are, and so having a record is really clear, because that clarity and keeps you sort of grounded at where you're really at. So that's key. Yeah, for sure.
Cool. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.